Okay, let's unpack this. If you've ever thought about selling your home, but you still have a mortgage, you might wonder, can you even do that? And if so, how does it actually work? Owing maybe tens, even hundreds of thousands, it feels complicated.
Well, let me just say right off the bat, this is totally normal. Actually, it's how most homes are sold, which our source material points out really clearly. Today, we're taking a deep dive into the behind-the-scenes truth every seller should know about this process. We're drawing our insights from a really excellent piece on Susie Karstedt's blog at Rethinking Real Estate in Lake Depths, Washington. And our mission here is pretty simple. Demystify that closing process. Explain what happens to the loan and make sure you feel, well, totally informed.
Absolutely. It's one of those things where people often assume the worst, right? Like they need a huge pile of cash up front.
Yeah.
But the system is actually set up to handle this pretty smoothly. We're going to uncover some, I think, some real aha moments today. You get that quick, solid understanding, connecting the dots on how this seemingly complex thing is actually quite, well, manageable.
Yeah, let's get into it. One of the first things, maybe the most foundational thing to grasp, is that a mortgage isn't just any old loan. The source explains it's secured by something called a lien. So what exactly is a lien? What does that mean practically?
It means, well, pretty much everything in this context. A lien is basically a legal right, a claim the lender puts on your properties, their insurance policy, saying we get paid back from this property. And it's not just an agreement between you and the bank, it's recorded in public records, usually as a deed of trust or maybe a mortgage deed, depends on the state. And here's the kicker. Until that loan is fully paid off and the lien is satisfied, it stays with the property.
Stays with the property?
Yeah, even if you sell it, it's attached.
Okay, that's huge. So you can sell, but that lien, that mortgage, it has to go somehow. What does that actually look like for you, the seller, during the sale?
Right, so the core idea is simple. The mortgage must be paid off in full. But here's the neat part. This happens automatically, kind of behind the scenes, right at closing. You don't usually need to worry about it beforehand.
Automatically? How?
Through a neutral third party. Usually an escrow company or maybe a settlement agent or attorney, depending on where you are. Their job is crucial. They collect the buyer's money, use part of it to pay off your entire existing mortgage balance down to the penny. Then they work to get that lien officially released from the public records. And only after all that is settled, they send you any money that's left over, the proceeds.
Okay, that makes sense for the main mortgage. But what about, other loans? The source mentions things like second mortgages or equity lines. Are those handled the same way, like, say, HELOC?
Good question. Very common scenario. Yes, besides your main mortgage, you might have what are called secondary encumbrances. That could be a home equity line of credit, a HELOC, like you said, or a second mortgage, sometimes even things like judgment liens and from unpaid debts.
Okay, so more claims on the property.
Exactly. Now, your primary mortgage, the first one you got, that almost always has what's called first lien position, priority number one. Any other liens, the second mortgage, the HELOC, they're in a junior position, meaning they only get paid after the first mortgage is fully satisfied. There's a strict order. And the escrow company, they manage all of this. They don't just get the payoff amount for your main loan. They order payoff statements from all the lien holders, first mortgage, second, HELOC, everything. And they make sure everyone gets paid in the correct order of priority from the sale proceeds. And this is critical. All liens have to be paid off and released for the sale to officially close and the title to be clear for the buyer.
Gotcha. So order matters. But what if there isn't enough money from the sale to cover everything? All the liens.
That's a tough situation, and that's what the source calls a short sale. Basically, the sale price isn't high enough to pay off everyone who has a lien. In that case, you, or usually your agent, have to negotiate with the lenders. Ask them to accept less than what they're owed so they'll still release their lien. It's definitely more complicated and can cause significant delays. It's not the standard process, but it happens.
Okay, good to know about that edge case. So let's circle back to the standard process. Walk us through closing. What happens right then?
Right. So at closing, it gets really specific. The escrow officer needs the exact payoff amount for your mortgage, calculated right down to the closing day. They request this formal payoff statement directly from your lender, maybe your ELC lender too. Then the money flows. The buyer's funds come into escrow. First, escrow pays off your primary mortgage. Boom, done. Second, if there are junior liens, like that HELOC or second mortgage, they get paid off, again, in strict priority order.
Okay.
Third, the escrow company ensures those liens are officially removed from the property's title records,
making
it clean. And finally, whatever's left after paying off all liens, plus any closing costs like commissions, taxes, fees. That remaining amount is wired or sent to you, the seller.
So the bottom line then is the mortgage just disappears as part of the sale. So the buyer gets the house free and clear.
Essentially, yes. The mortgage goes, the liens go, the buyer gets what's called clear title. And the main takeaway for you, the seller, is really peace of mind. You don't need to scrape together funds to pay off your mortgage before you list your house. The whole system, the whole escrow process, is specifically designed to make sure all those debts tied to the property are settled during the closing. The sale just can't finalize until they are.
So selling with a mortgage isn't some weird exception, it's the norm.
Absolutely the norm. And the key is just having it handled correctly by a professional, like the escrow company, to avoid any surprises. It protects everyone involved.
That really clarifies things. It sounds like, well, a really well-oiled machine, actually. This whole process of selling a home you still owe money on, it seems daunting, but it's actually this meticulously designed system. Ensures a smooth transfer, no leftover debts attached to the house.
Exactly. And if you sort of zoom out, connect this to the bigger picture, this deep dive really shows how these quite intricate financial and legal gears are turning behind everyday things, like selling your home. Which kind of raises an interesting question, maybe something for you to think about later. Beyond just real estate, what other common financial things in our lives, buying a car, maybe even certain types of contracts, might rely on a similarly complex but really crucial background processes? And how could understanding those hidden mechanics maybe give us more peace of mind, or perhaps even help us make smarter choices?
That's a great thought to leave folks with. Definitely something to chew on. Apply this knowledge, feel confident, you're now much better informed about selling your home with a mortgage.